How to purchase a home in your 20s. As a mom of two sons that are in their 20s, these are conversations that I'm having daily, weekly, and monthly. And I thought it might be helpful to really just talk about how to purchase a home in your 20s. So as I talk with my sons, there's a few big things that come up. One, there's just a fear. Like they have a fear of the commitment. They have a fear of the price. Like when they're looking at $300,000 on a purchase price, like it freaks them out. And so part of the exercise and what I go through with them is just to really first start with a budget. So as we kind of go through, what are their debts? What are their commitments? Are there student loans out there that are coming due? What are the minimum payments on those student loans? These are things that you want to think about when you're thinking about purchasing a home in your 20s. And really, what's their budget? So I have one that is graduated from college, another one that's in college. And the one that's in college was really interested in, hey, mom, could I buy a house? Because he has enough money for a down payment. He would need help qualifying, so we would have to co-sign for him on the home loan. But in his mind, he's running the numbers to determine, could I purchase a house and then rent out 2 bedrooms to his 2 roommates? So, I think that there's a lot of great conversation that goes on depending on where you are in your 20s. If you've just graduated, maybe you have your first job, you might be concerned, hey, I haven't been on my job for 2 years. When you Google, it says you have to have a 2-year employment history. But here's what you may not know. If you have recently graduated with a college degree, then that college history actually gets to count as employment history. So as long as your new job that you have has consistent income that the lender can use from a qualifying standpoint, that might be enough. So again, I really think that if you are thinking about how to purchase a home in your 20s, credit is important, your debts are important, understanding budget is important, and really just talking with a home lender. So with my younger son, a $300,000 purchase price, I just whipped out my calculator and started to go through, okay, how much money do you have for a down payment? And we backed into it. And as we back into all the things that go into a house payment, it's not just the loan. The loan would comprise of that principal and interest portion. So that's what the loan payment is. My younger son does not have 20% to put down. He would be doing 3.5% or 5%. So then he's going to have mortgage insurance. So that's also part of the payment. And then we have to account for homeowners insurance and property taxes. Those are really easy calculations to get. And then from there, we can back into his budget. So based on that purchase price, after all those things, after the down payment, is he comfortable committing to paying that price? And in his situation, because he's still in school, he's thinking roommates and what are they currently paying and how that would offset his mortgage payment, which I love. That house hack is so important. And I think a lot of people just don't realize there's so many different strategies and so many different options out there. Maybe you're somebody that has a parent or a relative that has a gift that they would want to give you for your down payment and or your closing costs. So there are options with that. Maybe you can't qualify on your own. Maybe your income is inconsistent. Maybe you took a job right out of college where you're self-employed and you haven't been on your job long enough to be able to qualify. Know that there are co-signer and co-borrower options out there from a lending standpoint that might be able to help you get into that home in your 20s sooner than what you might think. I know that there's a lot of fear out there, and really there's no need for fear. I think the way we remove fear from any equation is to get the facts. And that's really what this is about. So if you have questions, comment below. Give us a call. We are here to help answer the questions that might be holding you back from home ownership. Let's face it, the way that we build wealth in this country is through real estate. And I know when I say that, you're like, what does that even mean? Well, when we look at the price of real estate over time, there is something called appreciation, which essentially means that if you purchase a house today, let's say for $300,000, the annual appreciation rate, which means the price of that home, goes up over time. Now, it's not always consistent. So meaning that it could be 1 year, maybe your home increases by 3%. Maybe that next year your home doesn't increase at all. Maybe the next year it drops value by 1 or 2 or 3%. Maybe the next year your home increases by 10%. But it's that accumulation of appreciation over time, that's where we build wealth. So think about it. If you are purchasing that $300,000 house, and let's say that the average appreciation rate right now in our country is about 6%. Now, neighborhoods are going to vary, states are going to vary, but on a national level, it's 6%. So if we do the math and we say you're purchasing a $300,000 house and a 6% annual appreciation rate, that means that for that first year at a 6% appreciation rate, you will have an $18,000 increase in your wealth just for that first year. And then if we go to the second year, now your market value, let's say, is $318,000, and maybe the appreciation rate is 3 or 4 or 5% the next year. You kind of get the sequence of how this works and how those little increments start to build your wealth. What's the alternative to purchasing a home? It may not be the right time for you. The reality is, it may not be, and that's okay. But kind of understanding and getting the facts of what it would take if this is something that you ultimately want. Some people like to rent. Some people don't want the commitment or obligation. That's okay. My quest, my desire, though, is just to make sure that you have the facts. When you're renting, you are paying somebody else's mortgage payment. That's the reality. When you're renting, you're not building wealth through appreciation. When you're renting, you have limited scope of what you can do with that dwelling. Can you paint? Can you add a pool? Can you change the carpet? What if your landlord decides to sell? Then you're displaced. It's just a different time. And look, I've rented in my life. So please know that renting can be a good bridge until you're ready to purchase a home. But if you are wondering how to purchase a home in your 20s, this is a great starting point. If you want to get an idea of what you could qualify for, we have a fast-track loan path that lets you enter your information without pulling your credit to just kind of give you a ballpark of what a payment might look like so you can start to get your arms around that budgeting part of the home buying process and a monthly commitment on a payment. If you're ready and you want to skip that and get started on your home loan journey, click the link below to schedule a personalized consultation tailored to you and your goals, and we'll be happy to help get you on your path to home ownership. Thanks so much for watching, and please don't forget to subscribe to this channel for more valuable mortgage knowledge to break down barriers and help more people in their 20s be able to purchase homes and feel good about it. If you, again, have questions, don't hesitate to reach out.